The US also sees it as a national security concern, where they know that a lot of American growth, domestic growth, is happening because of AI through data center spend, the growth in electricity, and all these things. And so they needed to keep happening. And my view was that they are looking across the world as it stands today and seeing, okay, like printing all this money, we have all this debt, we need to monetize the debt. Who do we know that can actually like help us fund this growth of AI? And so my thinking was that the one kind of random distant force that has like come into the foreground has been the growth of stablecoin issuers. And so today they are the 15th largest group in the world, those who own US Treasuries.
Hi everyone, welcome to Fully Diluted. I'm your host Dylan Bane of the Enterprise Research Team. Today we're joined by Annie on Robot Ventures. Annie is a somewhat longtime friend now and previous guest of the show, and recently wrote a really great piece on the electrodollar and how AI might be primarily financed by stablecoins. So without further ado, I'll let Andy give a bit more background on himself, and then we're going to get right into it.
Cool. No, thanks so much, Dylan. Yeah, it's a pleasure to be back. A little bit about me, I guess. Yeah, so currently an investor at Robot. I know we'll get into it a bit more, but yeah, we're early stage, primarily crypto-focused venture fund. Before this, I was a partner at Dragonfly, so we manage a few billion in also primarily crypto venture. Before that, I was in the startup space, primarily building my own companies. And actually, funny enough there, I really wasn't too deep into crypto back then, but slowly developed the bug, I think like everyone else, and then kind of got in the space.
Very cool. So let's just get into where are ventures in early 2026. So I think, obviously markets are down more than a bit. Yeah, I'm hearing lower activity on the venture side, but mixed results as well. Some are really excited about what they're seeing. I'd love to hear your perspective on where do you see crypto VC right now, or maybe just VC more broadly.
Yeah, I mean, this is a question that comes up a lot because I think the market structure today is not something that many people just in like modern investment times have seen in a very long time. I mean, one quote I always think about is I think Bill Gurley was on the Tim Ferriss podcast a number of weeks ago, and he said, just like, in a very like demanding tone, that like if you're not raising like or investing in AI right now, or like raising for a big AI round, institutional investors are just not compelled. Mm-hmm. And he said it so matter-of-factly that I think Tim Ferriss was a little bit stunned, and he's like, oh, what about biotech and all these other areas? And Bill is just like, no one cares. And I think that dialogue, I think, really just frames very well of how most investors are thinking, of how a lot of founders are thinking. Like, we've seen a lot of, I think, just crazy pivots into AI stuff, and it kind of mirrors, I think, what crypto was like in 21, where everyone who didn't, wasn't a crypto company tried to have an NFT and things like that. And one could say that AI is kind of like that motif right now in markets. But on the level of, I think, what we're seeing, there's just tons, I think, of like fundamentally good business activity right now. I mean, on the macro, it's like we're still toward the earlier part of the business cycle than the latter end. Credit is coming back. It seems that this year will be a banner year for liquidity, which is also, going to explode across markets. Perhaps metals is like the activity we're seeing in the rare earths and just copper and silver and gold more broadly are the canary in the coal mine, I think, for perhaps other commodity driven products and then also assets down the road. But no, we're seeing tons of new ideas. And I mean, like this cycle is divergent because it's like there is just like a lot of progress done on the core fundamental crypto side. I mean, perp dexes have ripped. Stablecoins, as we'll get into, are just crushing month over month in terms of growth. They currently number, I think, like $310 billion, which is absurd if you asked anyone 5 years ago, right? They wouldn't have guessed it would be that high. And I think the job now of early stage crypto investors like us and founders is to design amazing products that I think will just galvanize future users. And that remains a big question of like, okay, we know certain things work very well, but then how do you like take that down into like the base atomic unit and make something that people want on general scope and make it cheap, faster, affordable, make it. And like one example of that is just everything we're seeing. I know people have talked about it a lot, but like just the growth of like things like Polymarket, right? I mean, we were investors in Polymarket. I saw that when we were at Dragonfly and we invested in then Robot, the first round of Polymarket. And like just the level of excitement for things like that is something I think the broader world has not fully internalized just yet.
Very cool. So like out of all those categories, where are you most excited about right now?
Yeah, good question. I mean, one area we've been digging a lot into that perhaps is not pure crypto, but I think it will kind of entertain a lot of these concepts down the road is like the auto-formalization space. And we have a number of, I think, exciting things coming out there. But companies, for example, like Math Inc. was started by a former XAI co-founder, amazing team. So just to step back a little bit, auto-formalization for the audience is the conversion of, say, natural language math into formal verification, which is like the formal specifications of mathematics, often like proved through programming languages like Lean. So you might have seen all the kind of recent advancements through amateur mathematicians online of people trying to solve Erdos problems. And that is a subset of auto-formalization, which has been a big problem for a long time, but it's really taken, I think, the advances in core AI and through companies such as Math, started by, I think the excitement really kind of began here through the initial development of companies like Harmonic, which is Vlad from Robinhood's new company started a number of years ago. And the level of just interest through mathematicians and even people who like studied it in school and they had like no shot of doing something interesting, but now they can actually play around with it. I mean, it's like one of the newest vectors I've seen that I think will just skyrocket in the next few years.
Awesome. And
let me expand on that a little bit more, actually. Yeah, I can expand on that a little bit more, actually, which is just because there's so much here, and it's quite an exciting time for us too. Is that like, if you play around, I'm sure at this point everyone has played around with LLMs, right? And they've given it health questions, they might have given it travel stuff, like all the things that just govern their daily lives. The thing that you notice very quick is that if you deal just with even basic mathematics, the logic chain and the token generation just kind of messes up at some point. And in part, it's because these LLMs are just like not widely trained on mathematical corpuses, right? Like they are all kind of through text and like old books and just things on the web. But a lot of that is not like pure play math. But if you want to bring in LLMs into like the majority of modern applications, which require a lot of precision, a lot of math, a lot of statistics, like you need kind of what they call the March of Nines, which is precision up until like the seventh nine or the eighth nine, right? And you need this to work basically every single time to apply something like ChatGPT to airplanes or to aerospace, which obviously requires a ton of precision. And it does seem like the only way to bring LLMs and generative AI into the world that you and I experience of just like, oh, wow, things work, things are fast. Like, who knows, maybe you can apply to self-driving, open source models and stuff like that. For that to work, you do truly need, I think, auto-formalization. And I think that's why like this is the big unlock that many people are not expecting and why there's so much hype right now, because it's like we're I think starting to exhaust a lot of the low-hanging fruit in basic AI models. And so the question obviously then arises, which is like, okay, where's next, right? Where is the next frontier of this stuff? Is it like the scaling law continue to hold? I mean, yeah, you could believe that. But on another hand, it could also just be like, oh, we need a new data set. And obviously you have more compute and things like this and new ways of thinking to kind of govern new models to apply to, I think, different spheres of the world and universe.
Gotcha. So auto-formalization, haven't really heard a lot about that within crypto itself. Would you say you've expanded your horizons beyond crypto for topics like this, or do you see potential applications down the road within crypto itself?
For things like this, yeah. I mean, I think like my view of the sector and crypto more broadly is that it is just going to become fused in with modern day applications, with front ends we already know and love, with different types of technologies that kind of already work and that need to scale, right? I mean, you can kind of see it in just how stablecoin applications are beginning to grow. I mean, it's like they're not really inventing a ton of new 0 to 1 things around the UI or UX, right? I mean, it's like it's making settlement and things like this a lot faster on the back end. But the front end is like, we haven't, like I make this joke with Robinhood where it's like Robinhood still basically looks like a millennial generated app, right? And it's worth what, like close to $100 billion. So it's like a significant company, but like the design, especially on my desktop, if I were to go on right now and just like play around with it, like I have trouble just like seeing the option chain on desktop for $100 billion company. That just seems like very low hanging fruit in the design realm that I think like people are not discussing more. And so I feel that maybe when crypto integrates these things, there's a lot of unique design in crypto. I mean, I'll give you one example, which is Euphoria, which is a portfolio company of ours who's doing tap trading on Mega ETH. And so I don't know if you've seen this, but I find it very cool where it's like you can like trade prices basically betting on the next block. So it's like, oh, is the price going to go up or down? And you're sort of tapping. And then if you're right, you make money, assuming, and the price kind of just follows that box or something that they show you in the app. And UX like that is what people really want, right? We're kind of in this like hyper capitalism driven world at this point, which is a function of like it's very postmodern, and I think modern day design principles don't reflect where Gen Z's mind is at, and soon to be Gen Alpha.
Yeah, I definitely agree with that. Yeah, so I'd like to talk a bit more about this fusion, maybe get a little more into the electrodollar piece. So, I'll let you explain your thesis more concretely, but it seems like at a high level, the idea is that massive demand for AI CapEx, not enough, financing that's accessible in the long run if you need 5 trillion plus from like sovereign wealth funds and other large institutions, and stable coins, which are creating demand for the dollar, could help finance AI CapEx in the long run. At least that's my understanding of it. Would love to hear more on like how you're thinking about it more specifically, and how did you come to this thesis?
Yeah, I mean, this is a topic that's fascinated me for a long time. When I was in school, I was studying, I think, the interplay between a lot of just global macro and the growth of deep technology, which, like in modern economic models, my view was that they don't take into account how endogenous a lot of this the runaway growth of brand new tech applications has been. And so that was a number of years ago. And so that ignited, I think, a lot of my interest in crypto, aerospace, just like many of the areas I find personally super fascinating. And like when I was looking at I guess, world today and market structure, it became very clear that like, it's almost as if we're all dancing on a knife's edge. If I think that was Jensen Huang who said that, where it's like, if they miss earnings just even like slightly, the entire world economy kind of just like goes in a tailspin, right? And that's a very precarious position for, I think, all of us to be in. It's like, even if you're not in tech, it's very important for you to realize, because it's like, yeah, you may have a stock portfolio, right? And if like Nvidia becomes a big part of that portfolio, which for many people it already is, and something happens, like you may not know it, but suddenly that pushes back your retirement, and that pushes back just like how you think about your daily life, right, in terms of savings and the income that you need in order to live. And so my view was like, okay, we've had an amazing 3 years of just constant AI growth, right? It's like things have been, people have said it's priced for perfection. NVIDIA just like does another 2x, 3x. And like all the AI names are raising blockbuster rounds. And you have, I think, 15 plus Neolabs. And so Neolabs are brand new sort of AI research labs in the vein of OpenAI and Anthropic, raising billions of dollars. And so as it stands today, I think that's the backdrop. As it stands today, it's like OpenAI last year announced a $500 billion facility, right, that we may have seen with Oracle and a number of other players. And the thinking was like, okay, $500 billion is already just an enormous quantum of capital, right? Like that's not a small amount to anyone, for even sovereign wealth funds. And my thinking was like, okay, that's a massive number, but where do you go from there, right? So if you want to raise the next order of magnitude, say $5 trillion, where does that money come from? And so my thesis was that what's happening today in the AI space is you have private companies, like I just said, OpenAI, Anthropic, raising all this money to continue growing. But the US also sees it as a national security concern, where they know that a lot of American growth, domestic growth, is happening because of AI through data center spend, the growth in electricity, and all these things. And so they needed to keep happening. And my view was that they are looking across the world as it stands today and seeing, okay, like we're printing all this money, we have all this debt, we need to monetize the debt. Who do we know that can actually like help us fund this growth of AI? And so my thinking was that the one kind of random distant force that has like come into the foreground has been the growth of stablecoin issuers. And so today they are about the 15th largest, if you combine all stablecoin buyers, it'd be, I think, the 15th largest group in the world, those who own US Treasuries. And many of the countries are stepping back, right? So whereas before in the petrodollar era, you could kind of believe that China and Russia and all these places would buy treasuries because it's like, oh, they need oil. But today that's like become less and less the case. Like they might have domestic reserves, they want to get off US hegemony. And so the big, I think, thing that the American government will realize is that Tether and Circle and the long tail of stablecoin issuers could act as buyers of the US debt, which gives them much more cover when they need to monetize the debt, which has become a crisis, right? I mean, Elon's talking about it, everyone's talking about it. And so we always have to ask the question, it's like, where does the marginal dollar come from? And it used to come from China, used to come from places like Japan. They have their own issues. I mean, it kind of became very apparent with the yen carry trade kind of collapsing in the past few years, but they all have their own internal problems. And so it's like, where does the marginal buyer for US debt come from? And that's kind of what I was squaring my thinking around.
So in terms of that more like mechanically, obviously stable coins are stables that are going to be backed by treasuries. Do you see like compute and AI CapEx being financed with stablecoins, and that's what's going to increase the amount of just dollars that the stablecoin issuers will have access to?
Yeah, so you can kind of think about it like in the, I guess, turn of events, which is, or like the logical step of events, which is, yeah, they are forced to buy reserves with, buy treasuries with the money that gets minted. So it's like if you buy a dollar, right, they're buying a parallel unit of treasury. And on the money that they make from interest, it's like the question becomes like, where do they invest it? And you may have seen the recent thing with Tether, which is like they're buying tons and tons of gold every month. And that has become a huge force in gold prices alongside central bank buying. But if there is, you could say, like US hegemonic force, or, more of a sovereign need for these players to actually kind of funnel their money into domestic assets, you could kind of totally see like, I guess, with the strong arming we've done, I think in the US in the past few months, like you could kind of see them like just, I think, pushing the force down on some of these players and making them, I think, comply with regulations and things like that, of like, yeah, helping funnel their money into what the US considers to be very important national security assets, right? Like everyone knows, and I think I read about it in my piece, which is that like everyone knows that this is a race that like we cannot lose. And like given that the stakes are so high level now, Mustafa Suleyman, who had this book, The Coming Wave, kind of talks about that. Like technology is this big orchestra, but who is the conductor? And right now there's like no conductor, right? It's like very kind of clear that like everyone is in their own boat. You have the Chinese models coming out with stuff on the same day as Google's kind of Gemini announcement. And so like you kind of need, I think, or maybe you don't need, but I think what's going to happen is that there will just be another circular loop, much like we saw with the petrodollar, of like, okay, more people buy stables, the stables like generate interest, the interest money gets invested somewhere. It might as well be AI because AI is the only source of growth kind of we have today, and then the cycle continues, right?
Gotcha. In terms
So
of
this
like,
is not introducing necessarily systemic risk on. Some people have asked me, they're like, oh, is this introducing systemic risk on behalf of Tether or Circle? They behoove to change this, and it's like not really, because Tether makes like tons of money just from interest and the other business activities that they have. And so, yeah, maybe their valuation, I don't know, is not the oft reported $500 billion, but even if it's $300 billion and it's growing like 70% year over year or more, like you get to very large numbers very fast. And to put in perspective, Norges, which is, I think, the biggest sovereign wealth fund today, is quote unquote only worth $2 trillion. And so if you compare that to something like Tether that, could be growing at these just exponential rates, it's like, okay, maybe one day we can totally see stablecoin buyers of the debt kind of become like the 7th largest group in the world instead of the 15th. And then that could go to 3, right? And like we're clearly on this trend. And I think this is why more people should be discussing this, because it's like, yeah, no one, I think, has critiqued my opinion on like, yeah, where is the next order of magnitude of money going to come from?
yeah. Do you think that stablecoin adoption will be, or at least the market cap increase will be driven by like foreign governments, or is it going to be just like individuals and underbanked countries? Where do you think all this capital comes from?
Yeah, so I think as the machine economy, and what I'm going to define as the machine economy is just assets that are much easier for agents or like AIs to use. Like I think many of these things will kind of live on chain, just in the sense of like ease, and so ease of settlement, and also it's just like easier to collateralize, right? Like as we've seen with DeFi, if you have composable layers, and like let's say I own an energy bond and I want to do some fancy derivative with that. If you're an AI, it's like probably much easier to do that on chain versus like doing the complicated bank apparatus that exists today. And so I think there will be a number of these assets that quickly live on chain and that become very easy to be commodified and sort of moved around as money. And yeah, I think the big buyers here will be central banks. And so what I'm sort of thinking is like, much like we saw in the past century, it's like if you want to enter the next phase of growth in the 21st century, like who knows if it remains to be AI right now, right? But I mean, that just seems to be like the only thing that the world, like everyone truly believes in. It used to be, we had many different vectors of growth, and maybe this is a very Peter Thiel centric point, but it's like, yeah, we've all sort of cemented the belief that like AI is the main vector of progress right now, for better or for worse. And so if you want to participate, in this insane growth in both public and private markets, and you're a foreign country or a foreign citizen, it's like, how do you get access to US markets? I mean, it's very tough. And so crypto gives people a way to do that. And you're kind of seeing this with the growth of like equity trading on chain right now. And that's giving many people who don't even live in US supported countries or like American citizens, perhaps, access to trade US equities.
Do you think central banks really need access to on-chain liquidity though? Like I see that for like individuals in these countries, but if central banks are the largest buyers, like why don't they go right to the US treasuries themselves?
Yeah, and so like that certainly has what's been happening, and I guess my view is that as we see more chaos, I think on the level of inter-bank to bank regulation, U.S. sanctions go up. Like, I'm not saying that this is a steady state. I think actually what I'm kind of saying is like this would be a crazy thing if it did happen. And so right now, yeah, people just kind of do the common treasury operations today, but I can totally see a world in like 10, 20 years when a lot of foreign relations kind of break down, that yeah, perhaps it is, and stablecoins become a way larger portion of their kind of internal holdings than holding treasuries or something like that. Maybe they get more yield back, right? Because like when you hold it at a bank or something, you're getting kind of the bank rate versus the actual yield you could get at a money market or something like that. That it will just be easier. And so it's actually a very complicated process to hold all that money today. And kind of what I'm saying is that we're in a world that is making holding digital dollars a lot simpler, faster, easier. Like, and yeah, I'm not saying it's going to be like all of their money is going to be stables, but I'm just saying like a larger fraction than it is today will be stables. And I think it feels to me like that's an easier bet to make than just saying that things will remain the same, right? Which is like, if you want to disagree, I think with my point, it would just be like, oh, things will be the same. We're going to do everything the same. Like they'll have no need to do this stuff. And it's like, I think we've actually made a very pivotal discovery here, right? I think like the stablecoin stuff, and I think on-chain payments have like revolutionized a lot of the world. And I think people in the West are just like slowly kind of coming up to what we and a number of people figured out, I think, a while back. And so as people realize it, yeah, I just think there'll be way better and easier applications of digital money on-chain that doesn't even need to fully be central banks, but it's just like that big sovereigns will want to use.
That makes sense. And in this like long-term future, do you see like stablecoin issuers being able to fully retain the rights to interest and not have to pay out to the holders themselves? Or do you see maybe stablecoin holders, allocating to, I guess, AI CapEx funds on chain, and that's how a lot of this infrastructure will be financed?
It could eventually be. I mean, things are moving a lot faster than I initially gathered. I mean, it's like, I don't know if you saw the recent announcement this week, but it's like now we have prediction markets kind of coming to Hyperliquid, and that will kind of be composable, right? And so it's like the world that we're entering in is where it's like every financial layer is fully composable. And so if you live in that world and it's like, okay, I can just borrow against this asset, move that here, do all of these kind of complicated financial aberrations in a matter of hours versus right now, which would take you weeks, if not months. It's like, why would I use anything else? And I think that like difference in UX and that difference in ability is something that I think the average person is like starting to realize. And you're kind of coming in the macro, you're kind of seeing that I think happen in the level of governments too, right? With the Genius and Clarity Act and a lot of the, I think, political infighting that we're seeing here. And I mean, if the Clarity Act, I think, actually comes to fruition, I think that's going to be huge. And I think that's going to be a big watershed moment for a lot of people at TradFi, that like, wow, okay, crypto is like not just some orphan kid that like no one likes, but it's like a real competitor to our main business. And I think that could also just unlock this huge tsunami of asset movement and more and more people, I think, innovating on chain and treating this as the composable layer that we all thought it would be.
Yeah, I think composability is obviously one of the largest unlocks. Yeah, I think a lot of people are talking about agents and with Moltbook and everything, a resurgence there.
But actually, even on that, let's rewind a little bit, which is like perhaps it's even like on-chain capital could be more competitive than a lot of incumbent capital sources, right? Like if that's the case, and like some on-chain capital wants something riskier, and they're willing to like fund you at whatever price, but it's like they're willing to like actually take that loan on. That is something that traditional markets like just won't do, right? They might be too afraid of the risk. But when you have permissionless internet capital markets, I think it enables new vectors of discovery that previously didn't make sense. And we have no idea where that's going to go, right? Like if you are able to give huge quantums of money and lend and receive this amount of money in the sense of loans, and then use that to make amazing things, I think like that would be of course, very massive.
Yeah, and I guess on the agents question, do you see agents maybe like directing or making most of the decisions for financing in this, on-chain future and taking advantage of all this composability, or do you think it'll remain mostly human driven when we're thinking about, not just like CapEx and AI infra financing, but also just like compute spend for startups or, neo clouds? Like, how do you see all this unraveling?
Yeah, I think on the daily compute stuff, I think a lot of that will definitely be agentic. Like I think like one of the things that people are very bad at is like predicting exponentials. And like, many people have written about this, but like all the stories you hear in like the late 90s, early 2000s of like, wow, we thought the internet was over, we figured everything out. I think Mark Andreessen was famously quoted as saying he thought like everything was done in the internet in like 95 or like 96, which is like people figured everything out. I'm so late, like what am I going to do? And it kind of feels like we're in that moment right now, right? And so when we think about like the future of stables or like who's going to buy it, right? Great question that you asked. It's like it's impossible, I think, to truly say because so much of that I think will just be determined on like what products we make for people to buy, right? It would be impossible to say that the internet would be primarily used by people in developing markets through phones that they tap and that they like swipe on and like they have apps that they like play with and like play games on. I mean that's such an incredible concept, right? That like nobody in the right mind would have guessed in 95. And so there's no way to predict that, but I can totally see stuff like that happening, even if people say that I think we have all the basic stuff in crypto kind of figured out. And so I think there will be certain commodities that will be very agentic, like compute, energy, bandwidth. I think three that you and I have spoken about at length for a while, or just like that's, you could say like many of the big DePIN companies, right, are kind of building in this foray. And there are other things that I think just need some time to be figured out. Like you truly don't want people, you don't want like agentic trading maybe of like mortgage bonds or like very complicated assets that like if there is tail risk there and there's a mistake, like could it cause a catastrophe? And I think those are things that you don't want. But I think a lot of assets are okay to just be agentically traded. And I think it's, yeah, I mean, if we even step back, right, to our main thing that we said. So I think there's over 30 trillion of US bonds or just like long-term bonds sort of in circulation. I think that's like the right range, if I'm not mistaken. And so stables today are like less than 1% of that, right? I mean, it's like barely nothing. But imagine if we get to like 5% of that just being traded constantly. And I mean, or just like an easier fashion in ways that make it more permissionless and just like opens up the market to people who just have like an internet connection, for example, and they don't need complicated KYC or anything. What would happen, right? Like, what would pricing look like? What could composability look like of the so-called like risk-free rate? Yeah, and I think like the markets here are so large that if we even get to like something like 1-2%, it's like the world could look just dramatically different than it does today.
Yeah. Well, let's also talk a bit about more, crypto native stable coins, maybe like synthetic ones like, Athena, and then versus stable coins. As we think about, like you said, international relations breaking down, maybe the US becomes more isolationist. Do you think, that there's going to be greater demand for these more synthetic assets or maybe even just like crypto native assets or, just straight up stable coins like USDC or USDT?
One of my, I was, I think, catching something by Jeff Gunlock, the founder of like Double Line Capital, who I think was talking about this recently. And he's kind of known as like the bond king, like has made a ton of money trading bonds and stuff. And it's like, I think one thing that many investors are not paying attention to is we've had trillions of dollars of foreign capital enter American markets over the past 15, 20 years. Basically, it's been this like nonstop tsunami of just like people in China, as they got rich, they wanted American stocks. And the same was true across the world as more of the Asian tigers, I think, matured and hit kind of late modernity. It's like, yeah, a lot of their assets were just in American markets. So they just kept buying tech stocks. And now things I think have been priced, not like per se to a perfection, but it's just like everything I think in US stocks, right? It's like it hit a constant fever pitch. It just keeps going up. I think Google is at 4 trillion now. And yeah, I mean, maybe there's a 2 or 3x here, right? But kind of what I'm saying is that, and we've seen this in the start of this year today, it's just that the emerging market index has like now, I think, kind of come back a little. And I think people are just slowly starting to realize the risk with having all of these assets in one place. And so that I think that trade has worked for a very long time for good reasons. But I think it would be a mistake of the first order to just think the future is like the past, right? And I think now you're kind of seeing this a little bit across the AI space, for example, where it's like, to make modern day AI happen, from the chips to the software, switch gears, all of these things, data centers. It's on the order, I think, of like 80,000 companies, somewhere in that range. It's like a lot of companies. And many of these companies are not in America. Like obviously ASML is the most famous one. And you have all of these companies all across the world. And I think they will just start to eke out more market share as you have more restrictionist policies, as it becomes clear to many people in the US actually that we cannot make some of these things. And now you're kind of seeing it with the memory wars, like SK Hynix, this entire fight for HBM and things like that. Many of these companies are like not in the US, right? But I think SK Hynix was like, or SanDisk was the best stock of last year by returns. And yeah, you're going to start to see more of those companies that are non-American, I think, start to perform.
Very cool.
In part because the supply chain, yeah, just in my view, is that like the supply chain for what is like the modern day sovereign stack. Like I kind of coined this things a number of years ago, which is like, yeah, the sovereign technology stack is now AI, it's now crypto, it's now a lot of deep tech, which could include robotics, the rare earth supply chain. But countries are starting to realize that they need to like organize all of this complex coordination under their own aegis. And if it's like given away to someone else, you're just screwed, right? There's like no way to kind of get that sovereignty back if your entire technology stack is Huawei.
Right. Wanted to ask a question about DePIN. Obviously, you were investor in Dawn, Dragonfly. We just released a state of DePIN. I'd say sentiment's largely negative on the markets for tokens. Still a lot of excitement more on the early stage side. But where do you see DePIN today? What's been validated? What hasn't been? And do you see a future for it in crypto?
I mean, I read the report. I think it was a great job done by all of you, and I really liked, I think, a lot of the very insightful, detailed analysis of like each company in particular. The thing that surprised me the most, I think, was like how fast some of the decentralized energy players are actually growing. I mean, I was always a big fan of like Fuse Energy, and so I think it's good that I think more and more people know about that company now. But I think Alan is like a tremendous CEO, and I think what he's done kind of, it's hard to describe the business, but like almost like a vertically integrated or like a Tesla type approach in the UK, right, with the UK energy stack. I think it's like really been enormous and very valuable. And so it's nice to see the world, I think, kind of recognizing that like, okay, like energy is the modern day energy stack is like completely broken. And like for things like the electrodollar to happen, you actually need to like reshift the supply chain for a lot of these things. I think bandwidth, will continue to do well, like we backed on. Still very bullish on that. I mean, I think you and I think when we first met, we spoke about what the SpaceX IPO could mean, I think, for bandwidth markets and things like this. And that was a lot of my initial underwriting with a company like Dawn, which is, I think, eventually going to build the first bandwidth market in the West and maybe even the world. But I think now people have like recognized how big bandwidth is just via TAM, right? Like the majority of the ways outside of the Elon premium that SpaceX is going to get is because of Starlink. And so Starlink by itself has almost resulted in the biggest IPO of all time. And I think you're seeing with space stocks, but I think when people recognize that, and as Dawn continues to perform, I think they have 4 million households today as subscribers, but as they continue to grow there, I think people will like suddenly start to realize the importance of, wow, okay, bandwidth is just another commodity that should be traded. And it's crazy how you cannot hedge against like the excessive price of, say, New York bandwidth versus California, as an example. The area that I think I would be a lot more keen to see more about is, I know this year and last year has seen this, we saw tons of builders trying to build in like the like robotic data space. And so it's like, oh, how do we build data sets for robotics? How that goes is something I think I'd be interested in. I mean, we haven't seen, I think, a lot of interesting approaches there, but it feels like that's one of those areas that's very hot, but you're probably not seeing a bunch happen day to day. And so maybe the most overhyped category to me in that sense is like all the robotic stuff that was happening like a year and a half ago when I went to SBC, I think last year. So that's like the Science of Blockchain conference, typically held in the Bay Area. The last year was at Berkeley. It was like every 2 out of the 3 conversations I think I was having was around robotics. So it was like at a crypto conference. I mean, that's definitely something, right? I mean, yeah, it wasn't like protocols, was not really a ton of L1s, but it was just like people trying to integrate crypto and robotics, and it's like, wow, okay, like maybe we might find something here, but like probably not, right? I'm kind of curious, given that you helped write this, like what did you think of the piece? Where do you think a lot of this is going?
Yeah, I mean, I think agree with a lot of what you said. Energy is very high potential, especially Fuse and Daylight, among others. Still very experimental, like Glow. I think a lot of these don't have tokens yet. Some are like Fuse is about to launch, so we'll see how that performs. And I think that's definitely something to keep an eye on. I think one thing that some of these companies are pivoting towards is InfraFi that we speak a bit about in the report. So Daylight still hasn't launched your token. They're going to start doing lending on basically the infrastructure that's the solar panels that are being connected to the network that you can connect with stablecoin liquidity. So a little bit tangentially related to your thesis, I think. So I think that's a big area that we're looking into. USD.ai is going to be launching next month. Straight up lending for financing for mostly AI startups who are renting.
Yeah, really quick on that. I mean, I didn't originally think that would be like a DePIN category, but that is, of course, another area we've been spending a ton of time in. I think just like how the GPU AI kernel stack is going to look in the next few years. And yeah, I've been talking to a bunch of people here, but I think there's so much low hanging fruit to be built around that. And like USDII, which we invested in at Dragonfly. I mean, what a great story. I mean, I know the guys pivoted a bunch and they finally nailed this, but I think that people are underestimating their growth and like, yeah, very excited to see where they go.
Yeah, 100%. Believe they're TGing in just a few weeks now. So yeah, we're looking deeply there. I think we could see a lot of, even Dawn is doing some InfraFi, planning right now. So I think we're going to see a lot of activity there. One of our theses is that DePIN, if there's not a bull market or it's not a very light CapEx network, it's hard to really bootstrap that at scale. And InfraFi is a more potentially sustainable way to do that in these interim periods. So yeah,
or rather, that's a lot of the point I'm making too, which is that there's all this excess yield just in on-chain markets that you can pass back to consumers, right? Like if Dawn tokenizes just a lot of their bandwidth growth and then passes back to as like a bond to people, right? Like how much would people pay for that? And the same with Daylight. And I think like as more growth happens in hardware vis-a-vis software, it's like, oh, I probably want access to bonds of these companies that are growing at significant multiples year over year, especially as we've just been in like this crazy bull market with private companies, right? And I think your average consumer across the world who sees that and they don't have access, it's like, what do they do?
100%. So yeah, those are some of our views on DePIN, InfraFi. I think robotics stuff is still interesting. Like it might be early. I'd love to get your take on just like what do you think is just like the issue right now? Like is there just no opportunity for crypto at this stage and where robotics are?
So there might be, but I mean, it almost seems like the space is bifurcated in robotics, where it's like you're, of course, seeing all of this hype around humanoid robotics, right? And like one question I think, as I talk to more researchers and builders in the space, is like, I don't think a lot of applications in the world, or rather, I'm not convinced that a lot of applications that govern the modern world really require robots that look like people. I mean, there is a subset of tasks where I think that would be very useful, and certainly in the limit, like you would need some of these bots that like are very anthropomorphic and they can match the systems that we build. Like planes are designed around people. Like many apparatuses, of course, are designed with things that look and feel like people. But I think this gives us a chance to actually re-underwrite many of the ways in which the world works and actually come up with different shapes and styles of what technology should look like, right? Like if you ask people in 2000, they never would have come up with the iPhone. Like no one would have figured that out. They would have just said, oh, we need like a better, faster BlackBerry. And that's just how it goes, right? Or a better, faster horse carriage. And kind of what I'm saying is that we're at this precipice once again of like, okay, I know Tesla is like spending, all of these billions of dollars on Optimus and like to the, detriment of the Model S. And I think the Model X even, but it's like, yeah, I would just like to see one of these or like the humanoid stuff, I think kind of work in the wild, or like outside of self-driving, one key use case, these robotics companies that really succeeds. And so I'm not talking about like more modular, smaller, you could say, or like more compact robotics companies. Like a company I'm a big fan of is this company, Orchard Robotics. And so not in the crypto space, but they're kind of using robotics to revolutionize a lot of the farming process. And like provide better yields, make the farmer's life more efficient. Another company in this vein is Shinkai Systems, which is they applied it to the fishing industry, so using robotics to like kind of kill fish in better ways and like make better sushi, which actually work. And so you're seeing these like nifty applications of robotics, but nothing on the level of like what Figure or 1x are promising to do, right? And I'm not a hater. I'm not saying like these cannot work. I'm still, I think, just coming to terms with the concept of like, okay, why does it have to look like people? Like, why are they all humanoids versus like, is there another form factor that it could take?
That makes sense. Yeah, as we near the end here, wanted to get your perspective or your advice on just for founders in crypto who are looking to raise from VC. Has anything changed compared to prior cycles? Just what advice would you give them for right now?
Yeah, I mean, I think a broad brushstrokes is like all early stage VCs kind of look at three things: team, product, and market. And right, because I mean, that's kind of what you have in the beginning. If someone comes to you with just a deck and like a very limited product, maybe more so now because of vibe coding, and maybe they have something. It's like you really sort of have to dig into these three things, right? Which is like how the product will continue to scale, the quality of the team, what distribution looks like, and in what market, of course. And so the classic advice I think would be like, or maybe something that people have not heard enough, is that now with the preeminence of AI tools, it's like the technology you build in many cases is probably not as useful as it was before. The barrier certainly has dropped, right? So it's like people can get to a prototype much faster. And so the bottleneck, I think, in a lot of systems is how people get distribution. And while that has always, I think, been a core concern of crypto, I think now it's just been turbocharged. And we're in this high octane environment where it's like, okay, if you want to raise millions of dollars and you're kind of showing me like a very half-baked tech product, I think that will kind of result in significant issues down the line. And I'm not saying that tech is like not important, but you really need to have a lot, and it needs to be differentiated for people to be very interested, I think, at this point. And so what is unique though, it's like there was a piece, I think, by the blogger Gorn a number of years ago, great author, and he was kind of talking about this, expanding around this concept of commoditize your complement, which is that in technology, kind of what happens is that the value goes, of course, to the scarce layer. So it's like software becomes cheap, suddenly the values in hardware, as we've seen with NVIDIA and I think the memory super cycle. And so now that tech is cheap in crypto, it's like, what's scarce? Okay, capital. Like capital, I think a lot of people will need that for their DeFi protocols and such, and also distribution of like how to hit people. And so I would always kind of think about it like that, which is, okay, I've done sort of the easy parts, and now it's like, how do I innovate around what is scarce? So I would kind of almost envision people to like have their own investor hat on. I mean, I think with AI, it's like one of the takeaways, I guess, from my piece as well, is that we're kind of all investors at this point. Like, even if you don't like it or not, inflation is skyrocketing year over year to the point where it actually might be, if it was properly calculated, it might be like 10% plus, right? Like asset inflation, I think the stock market at 16.6% last year through the S&P. So it's like, yeah, you really need to, I think, be aware of these concepts as both the founder and investor to not just generate capital for yourself in terms of superior returns, but also like to think about your business, right? How do you not get out innovated by AI? How do you generate a moat when it's like, okay, maybe a machine or many machines can just take this away from me? And so I would kind of update one's thinking, I think, to be a little bit more future focused and future proof your company.
Future proof your company. We'll make that a tagline. Okay, cool. Thank you so much for coming on. Feel free to share where's the best way to follow you on, whether it's socials or otherwise.
Yeah, I'm pretty active on Twitter. So my Twitter is Ani_Pi, ANI_PAI. And then I'm pretty, when I come back into my blog, so that's Electric Sheep, Dreams of Electric Sheep on Substack.
Awesome. Thank you so much for coming on.
No, thanks. Yeah, had a great time.